This week's blog post from 401k Maneuver is titled, What 401k Investors Need to Know, Market Update for Q1. Last year was a bumpy ride for the market and many investors are rattled. And we've talked before about how the market goes up 80% of the time, but that means it goes down 20% of the time, and that's where we're at right now. So what should you, the 401k investor, do? Keep listening to find out why we think you should stay invested and stay patient, and more about what we expect in 2023. It's important to emphasize that bear markets are not uncommon. They happen about every 7 years or so, and the average drawdown or decline in a bear market is 37%. And historically, the average bear market lasts about 1.2 years. Now, on the flip side, the average duration of a bull market is 6.7 years and averages an increase of 362%. But bear markets do cause an emotional stir, and sometimes it's hard to think with your head rather than your heart when emotions are stirred, especially if you're constantly tuned in to the talking heads in the 24/7 news cycle. How well you fare in a bear market boils down to how you handle yourself during a market downturn. One of the things that has caused the market to struggle last year was inflation. The Fed got behind the 8 ball and started raising interest rates very quickly. Historically, the Fed has never raised 75 basis points more than once at a time, and this time they did it at 4 consecutive meetings. Data shows that inflation is coming down. However, the Fed has said they need several months of evidence that inflation is coming down before it would change their current policy. Now, keep in mind the Fed has to stay very aggressive to try to get demand down and get inflation under control. We would argue that we've already seen 5 months of inflation where we've averaged only 2.4%, and that inflation is indeed coming down. Based on the numbers, things are not really as bad as what many people feel they are. At the end of December of 2022, the Dow Jones was higher than it was going all the way back to February 23rd of 2022. So if you ignore the first one and a half months of 2022, the Dow Jones actually went up. The S&P 500 is higher than it was going back to June 13th of 2022. And where most of the damage has been done is the NASDAQ, where the growth stocks are, but it's still higher than going back to October 11th. In the last 3 months of 2022, the Dow Jones average was up 15.39%. The S&P 500 was up 7.08%, and even NASDAQ was down only 1.03%. So we're starting to see a little bit of stability, a little less volatility in the market, and there are other indicators to suggest we are near the end of this bear market. We recently posted a video from Mark Sorensen, our Chief Investment Officer, who provides a deep dive into Q1 and shows why he's optimistic about the coming months. 401k Maneuver provides independent, professional account management to help employees, just like you, grow and protect your 401k accounts. Our goal is to increase your account performance over time, managing downside risk to minimize losses and reducing fees that are hurting your retirement account performance. We review and rebalance your account for you with the goal in mind of keeping you in what's working and out of what is not. With 401k Maneuver, you can go about your life doing what you love with confidence, knowing we are managing your 401k for you. If you have questions or concerns about your 401k performance, let me know. Let's have a conversation. Thanks for tuning in. We'll talk to you next time. Bye-bye.